Welcome back, folks. This is George with another power-packed episode of The Trader's Edge. Today, we're diving headfirst into one of the sneakiest, most destructive forces lurking in your trading psychology, recency bias. Yeah, you've heard of it. Maybe you've even fallen victim to it. And if you're sitting there thinking, not me, well, newsflash, you probably have. So grab your coffee, your chart, and your ego, and let's break this down because understanding this beast might just save your account. Let's go. All right, let's start with the basics. Recency bias, my friends, is the tendency to give more weight to recent events over long-term data or trends. Translation: you're letting the last few trades dictate your decisions instead of sticking to your plan. It's that voice in your head saying, hey, I've had 3 winning trades in a row. I'm unstoppable. Or worse, ugh, I just got stopped out 3 times. My system is garbage. I need a new one. Spoiler alert, your system isn't the problem, you are. This bias is the financial equivalent of dating. You know, when you fall for someone and ignore every red flag because, hey, the last date was amazing. Yeah, that. Except here, instead of losing time and dignity, you're losing money. And let me tell you, money doesn't swipe right. Let's talk about how recency bias destroys your trading decisions. It goes something like this. You're on a winning streak. 3 trades, 4 trades, all winners. What happens next? Your confidence inflates faster than a hot air balloon. You start risking more. You widen your stops. You throw caution and your trading plan right out the window. And then, bam! The market humbles you. You're over-leveraged, underprepared, and now you're staring at losses so big they make you question your life choices. Or maybe it's the opposite. You're in a slump. Trade after trade hits your stop. You get timid. You start second-guessing your strategy, skipping setups, and before you know it, you're too scared to pull the trigger on the one trade that would have turned things around. That, my friends, is recency bias at its finest, turning confident traders into reckless gamblers or paralyzed spectators. And don't even get me started on revenge trading. Oh, you've been there. The pair that took your money? You're out here trying to get it back like some kind of financial vigilante. Spoiler alert, the market doesn't care about your vendetta. It's laughing at you while it takes even more of your cash. Let me hit you with some real-life examples. Back in the day, I thought I'd found the holy grail of trading. I was trading pound CAD on a 15-minute chart, hitting win after win. I felt invincible, like I'd cracked the code. Then, guess what? I started upping my position sizes because, hey, why not make more money when I'm already winning? Big mistake. Fate punched me in the face. Within 4 days, I lost everything I'd gained in 6 weeks. Why? Recency bias. I ignored the bigger picture and got caught up in short-term success. And it's not just about loving a pair. Oh no. How many of you hate certain pairs? Maybe EURCHF burned you a few times, so now you avoid it like the plague. But here's the thing. Just because it didn't work last month doesn't mean it won't trend beautifully next month. The market doesn't hold grudges, only you do. All right, enough doom and gloom. Let's talk solutions. How do you beat this silent assassin? Daily reset. Start each day with a clean slate. Meditate, take a walk, whatever it takes to clear your head. Leave yesterday's wins and losses at the door. Stick to your plan. If your system says go, you go. If it says stop, you stop. No exceptions. Trust the data, not your emotions. Check your ego. Winning streak, great. Don't get cocky. Losing streak, tough luck. Don't get scared. Your system doesn't care about your feelings, and neither should you. Journal everything. Write down your trades, your thoughts, your emotions. If you can spot patterns in your behavior, you can fix them. Keep risk in check. Never, and I mean never, increase your risk just because you're winning. That's like doubling down at a blackjack table. You might get lucky once, but eventually the house, aka the market, wins. Here's the deal, folks. Recency bias isn't going anywhere. It's hardwired into our psychology. But just because it's natural doesn't mean it's unstoppable. Self-awareness is your greatest weapon. Acknowledge the bias, call it out, and refuse to let it dictate your trades. Trading isn't about being perfect. It's about being consistent. It's about playing the long game, sticking to your strategy, and keeping your emotions in check. So the next time you're tempted to let recency bias take the wheel, remember this. The market doesn't care about your last trade. Neither should you. Now go out there, trade smart, and crush it. I'll catch you in the next episode. Until then, Keep it sharp, keep it focused, and remember, your edge is your mindset. George out. Peace.